What if I told you there was one simple rule on when to buy and when not to buy? I'm going to show you an indicator, a chart, and what I'm using right now, my focus on never buying when this is happening. Do you have an idea? Do you have an idea? I'm going to break it down right here in this video, so make sure you stay tuned. What's going on, guys? Today we're talking about a very simple idea, and I know I say simple a lot and people are like, Patrick, you talk about day trading like it's so simple, but the thing is, day trading, buying, selling, the idea of like buying low, selling high, 1 + 1 = 2, it's just math. The problem that we face is the emotion, the FOMO, and not being able to control ourselves, and we're going on tilt. That's what we face. That's the issue. All right, so we're pulling up the Topstep Trader platform here, and you can see what we got going on. We got the 2000 tick chart. I've already talked about why I like the 2000 tick chart, why I trade the 2000 tick chart, and all that stuff in other videos, but just pretty much what this is the tick chart is showing us the actual transactions, not just like the volume, not just like what's going on per time frame, things like that. This is showing us only actual transactions. These candles are not printing and reproducing until they have 2,000 total transactions happening inside of that one candle. So the information that we're getting is, I feel like, very pure. It's very raw because it's only the information of buying and selling transactions. It doesn't matter how much time has gone by. It doesn't matter. It's just pure, raw price action. So what do we got here on the chart? We have the 13 EMA. Why do I like the 13 EMA? I think the 13 EMA is a little slower than the 9 EMA, but a little faster, than the 21 or the 15, obviously. So I think it's a really good kind of medium spot between the 9 EMA and the 21 EMA. And I like those two indicators because I think they're like a very kind of 21 EMA, 9 EMA is a very popular indicator that people are using. And you can see the yellow line here on the chart. This is the 13 EMA. So let's get down to the simple part. When do you buy? If you want to get long on the 2000 tick chart, when would you be buying? Well, obviously you don't want to be buying when we're kind of like off of the 13 EMA. You can see how we're kind of off the 13 EMA. Well, guess what? We pull back. And the thing about that is, just because we're pulling back here, like this could happen really quickly because it's a 2000 tick chart. This might only be one candle on the 3-minute chart, but this could be, multiple candles pulling back here, showing us that pullback. The 2000 tick chart can really start moving faster and faster depending on how much action is happening in the market at that very moment. But again, what's the simple idea here, people? We're buying only when we're near the 13 EMA. Now, does it always work out perfectly? No. You can see I ended up buying here earlier, 3 contracts at the 50.75. We pulled back. My support, my stop loss is right here below this candle. It could have been below that candle, but I knew that was a little too tight and I was expecting a little bit of volatility, kind of watching the book map at the time. Where am I getting long at? I'm getting long when we're near that 13 EMA. I probably could have waited for a little bit of a pullback, but it's always in hindsight. Either way, we made money on it. So I'm getting long when we pull back to the 13 EMA. We break back above the 13 EMA right there. If you had no other charts pulled up, you had no other information, and you were only trading this chart, you're like, okay, I'm going to buy when we break back above the EMA there, when we're at that EMA, when we're near it, right? That's the only time that I'm going to buy. That's when I get long, and then I'm looking to see how far this pushes up. This candle pushed up to a high of 59.25. I took profit at 58.75. You can see how we're getting overextended off of the 13 EMA, that gap between these candles and that yellow line. Where do I want to get long if I want to get long for this move back up here? But I definitely don't want to get long here. I don't want to be buying here. No FOMO, right? That FOMO, that emotion, that's what makes you lose money. It's not the actual idea of trading. It's the FOMO, it's the emotion. So I wouldn't want to get long when we're far off of that 13 EMA, would I? Obviously, this is not bulletproof. Like, it's not going to be guaranteed. We're looking at other things on the chart as well, bigger time frames, resistance, pivot points, VWAP, all that stuff. But if I'm looking to get into a trade and I have everything lining up on all my other charts, and I'm like, okay, I want to find my entry. I want to get in on this. Well, there's no reason for me to get in long here. I know that because I'm looking at the 2000 tick chart and I can see that we're far off that 13 EMA. So best case scenario, if I think this is going to keep going higher, I want to then buy the pullback, kind of that previous area of resistance turning into support, buy this pullback in general. And I don't want to be getting long when we're up here at the 59s. Worst come to worst, I get in long here at the 54 area when we're bouncing off of that 13 EMA. and then I would at least get stopped out for a smaller loss than getting long up here and having a bigger stop. That's one benefit as well of not chasing and not having the FOMO. I'm minimizing my losses as well. You can see the move up here from the 53s all the way up there to 64s. Again, you know, we start pushing up. That EMA starts getting further and further away, and then guess what? We pull back and we find that 13 EMA once again. We started to push up kind of high of day up there, and we were running into the pivots at that point. If we look for a short opportunity, same thing with the short here. You can see how we broke the downside here on this short right here. We broke the downside below the 50s. We got all the way out here at 37. Would I want to be getting short down here at 37 when we know we're that far off of the EMA? Do I want to get short there? No. So obviously I'd want to be shorting as close as possible to that 13 EMA. It pushed back up. And again, like I said earlier, you know, this is more so like once I find my setup on the 3-minute chart, once I find it on the 15-minute chart, once I know kind of where the VWAP is and I have a plan, I then look to the 2000 tick chart because it's going to give me, you know, very precise information and data on where we are at that very moment. And again, if we're really too far off of that 13 EMA, I probably already missed the move. So if we go back, we can see today was kind of choppy and just kind of a crappy day in general. But every time we get off of that 13 EMA, we can start to pull up off of that 13 EMA. Guess what? We start to pull back to it. Obviously, this is not 100% bulletproof, right? This is not 100% win rate. You still have to kind of have an overall plan, you know, see what's going on, support resistance. But I think if you're going to be looking for an entry, this is a really good way to be like, okay, look, you know, we're pulling back here. We push back up there. Do I want to get short down here at the 52s when we're far off that 13 EMA, or do I want to wait and just kind of see how all these moves kind of moves up, pulls back, moves up, pulls back, and just keeps riding that 13 EMA. I mean, that 13 EMA, every time we break the downside, we push back up to it. It's just constantly, you know, pushing back up to that 13 EMA here. And you're asking yourself, again, should I be entering short, you know, down here when we're far off that EMA from the 64s down to 57s, or would I rather wait for a push back up? You know, from here, you can see we broke the downside. Do I want to get short here at the 48s? No, I do not. The whole premise of trading like this is going to reduce a lot of that FOMO because you know, the market's, okay, it's squeezing higher, but I'm like, I'm waiting. You know, or I'm waiting for this pullback here, or I'm waiting for this next setup because I know it's gonna pull back. I know it's far off that 13 EMA. I know we're gonna touch that 13 EMA again at some point. Remember, just because you're not in a trade does not make it a bad thing, right? Like sometimes not taking a trade is a trade in itself. And you know, we're trying to fight the FOMO. We're trying to fight that emotion that we have to be in a trade. And the nice thing about this is 2000 tick chart, 13 EMA. If we're overextended either up or down, well, there's no trade at that point. We're gonna wait for a better entry. And this gives you a guide, and it gives you kind of a rule to be like, hey, look, nope, I ain't doing it. I ain't shorting it. I ain't getting long because we're too far off that EMA. I'm gonna wait. I'm gonna wait for that pullback, and then I'm gonna look for my trades. So there it is, when to buy and when to sell.